For more analysis of these changes, I spoke with Nick Lardy, Senior Fellow at the Peterson Institute for International Economics. I asked him what impact this reform was likely to have on China's coal industry.
Well, I think it's hard to judge the immediate impact. There have been a lot of distortions in the coal market in China and a lot of friction between the users of coal and the suppliers of coal. And if they really liberalize the market completely, there could be a big discontinuity in pricing and the extent to which they import. And I think it's very difficult to forecast exactly how it would shake out.
I also read that the United States and other coal producing countries are eagerly looking at this. But in looking between the lines, do you think this is going to be the kind of boom that the coal industry here is looking for?
Well, I think we have to keep in mind that China has one of the world's largest reserves of coal in the world. They're producing well over 2 billion tons a year. So this is not like oil where they're very heavily dependent on the external world. They do import quite a bit of coal for, anthracite coal for the steel industry. But the biggest part of their coal demand is for thermal coal.
And anthracite is the harder coal that burns better.
Burns better, burns hotter, and it goes into steel production. Correct. I mean, converting iron ore into steel.
Right. And another aspect, I read that a lot of the coal-producing companies in China, when they knew they had to meet this quota, for lack of a better term, they would either sell the worst quality coal or they would purposely try to miss the market size that they were supposed to be bringing to market. What kind of impact do you think this announcement or this decision could have? Could we see a more stable operation?
I think it could be more stable. What happened in the past, if prices rose a lot between the time they signed a contract and they had to deliver, all too frequently the mines simply defaulted on their contracts. We have to remember coal mining in China is pretty decentralized. Small private mines control a very large share of the output. State companies only a relatively small portion. So there were a lot of defaults, and so de facto many of the users of coal were already paying a market price because they might sign a contract at a low price for a certain amount of coal, but then frequently it wasn't delivered or wasn't delivered on time and to meet the demands for their customers, then they had to go out and buy in the spot market. So it was a very irregular, kind of chaotic market. So if they go to uniform market pricing and don't force coal producers to sell at under market prices, I think it would be a big step forward.
And that was analysis from Nick Lardy.